In this video, traders, we're going to look at why are currencies generally more range bound even when they're slightly trending. Let's have a look at this video. Hey traders, warm welcome to you. Alright, so currencies tend to be more range bound. Not all the time, of course, there are exceptions to the rule, but when you look at all the major currencies, they have odd scenarios where we're going to have reprice moves or news moves, but even when they're trending down or sideways, I've got USD JPY here, they were trending up or down, there's always generally a range bound feel to them. So yes, when there's a news catalyst, things change. For example, with cable here, if there's something positive from GBP, that's going to affect it. But the main reason, and we'll look at some of the kind of tactics we can use in a moment, the main reason, guys, is obviously because we're trading, it's basically a pair trade. We're buying one currency and shorting another. So unlike let's say a stock, let's say if we're just buying Apple stock, we're not trading it against anything else. We're literally buying Apple stock. We're not pairing off against something else. And so we have much more extreme supply demand imbalances than we do, say, for the currencies, because we're trading one currency against another. We're just trading US dollar here. We're trading US dollar against the Japanese yen. So it's worth bearing that in mind. So what does that mean for us? It means that if we are swing trading, I know many of you are swing traders, we've got to be careful we're not chasing. So we've got to look at the current conditions, number one, and say, okay, after 2 or 3 days of up move, I don't want to be buying. Now, it doesn't say necessarily mean you're not bullish and you're not looking for a long, but it does mean that you want at least an unwinding. You want a 3-step process. You want the initial move, you want to see what happens to the response for the move, and then the third part of the move is when you potentially pull the trigger or not. So, we get the wave, maybe we get a counter trend wave, or maybe we get a consolidation. Regardless, you've got to be very careful, because even if you are thinking, hey, we're going to move up, we're going to do this, we're going to do that, waiting until it's broken a level often means very, very tight trade. Yes, you could kind of get a little bit out of a breakout and stuff, but waiting for the rotation back is often better. Regardless of kind of what market you're looking at, Euro USD, same kind of thing, slight downtrend here, but again, and each currency pair is different. Some will have a 2 or 3 day move, some will have a 4 or 5 day move. The best way to do it is to ignore what I'm saying, but just look at the chart and go, okay, this is what's happening, this is how we're doing things. Okay, so the other thing I wanted to point out, guys, is if you are looking at the currencies and if you have an idea of the direction you want to play, but you're also understanding and recognizing that it's in a range bound environment regardless of whether you're an uptrend or downtrend, stuff like Bollinger Bands can, and whilst I'm not a huge fan of indicators in general, I like to use them for certain setups, definitely, but I think you've got to be very careful about over relying on them. But when you're in this kind of condition, and we have been, for example, for the past year or so on the USD JPY, yes, we had a bit of a shenanigans going on at the beginning of last year, but since then it's been pretty range bound, up and down, chopping around a bit, even when we've had lots of kind of weakness actually in the yen, based on the events in China. But you can see that how, generally speaking, waiting for a unwinding, a retracement, or at least a back away from an extreme Bollinger Band has served you. Yes, I know there's some examples of, if you say you got this and you ran along the Bollinger Band, you'd be fine, but the majority of the time, waiting for an unwinding is the right thing to do. So what does an unwinding look like? So an unwinding is either you got your drive, a pullback, or it's just sitting there letting the mean catch up. So a good example might be something like this. Okay, so you've had a good down move here and it just sits there, and eventually that moving average, the mean of that Bollinger Band catches up, and that's an unwinding. Yes, it's not a move back so much in price, but that gives you a 2 or 3 day move from that. And so I think the broad thing to have in the mind when you're trading these currencies is that, and very often as well, if you're getting caught out, you're getting stopped regularly, you find that every time you buy it pulls back, is to maybe not think of it so much as a textbook trade. So very often in textbooks, like, oh, you buy the breakout, you buy a trend line break, you buy this and that. There's nothing to say they don't work, but just be mindful and say, okay, maybe I should wait. Okay, I've got my break of what I want, but maybe I need to wait for a couple of days of consolidation before I look to this. So let's say you get the break, so maybe wait until you get a couple of days and then look to short the trade, or then look to trade it after it's unwound a bit. Always be thinking in terms of how can I buy another great trade used to call it wholesale and retail. How can I think of where's the wholesale entry for this? Retail is the chasing trade, and there's nothing wrong with that. From time to time you have to pay up. In the right conditions, in the right scenario, you have to pay up. But buying at a wholesale price, if you like, or a price that's back a little bit cheaper, a little bit more expensive if you're shorting than it was a couple of days ago, even with the bigger theme in play, often is a much better proposition, especially when you're trading these currency pairs which have a much more balanced supply demand, not so many big shifts. And so you are going to get these kind of stretches 2 or 3 days, then you are going to get them kind of calming a bit. And if you can find that sweet spot, then you can time your trades much better. You don't have to sit through so much heat. It means you can tighten your stops up a little bit more. It means you can just trade things a little bit differently. It's just worth thinking about, guys. Something, especially with these stocks that have been moving quite a lot recently, I've kind of looked at these and then compared them to some of the currencies and gone, okay, well, it's a completely different scenario. It's a different market you're trading here. It's a different way of looking at things. And yes, we do still get drives. We do still get multiple day moves, but waiting for that spring to be stretched, then compressed, and then making a decision on the compression, whether that is a pullback or whether it is some sort of stagnation in price, seems to be a much better way, in the current conditions anyway, of trading on a kind of 3-4 day swing trading basis. Let me know your thoughts in that comment section below. How do you kind of frame your trades? What's working for you in terms of timing some of these things, specifically some of the bigger pairs like the cable, USD, JPY, Euro USD. How are you making sure you're not chasing? How are you making sure you haven't got to have too much of a wide stop or getting caught in a reversal? What's working for you? Let me know in the comment section below, because it helps others as well as stumbling across the video. I appreciate your support, guys. Take care. Bye bye.